Good morning. Commercial Real Estate 101. What beginners must know. Getting started in commercial real estate or CRE can feel overwhelming, but with the right foundation, beginners can quickly learn how to invest, lease, or develop properties that generate long term wealth. Whether you're a small business owner looking to buy office space, or an investor seeking stable returns, or a developer exploring new opportunities, this guide breaks down the basics of commercial real estate. So, what is commercial real estate? Well, commercial real estate refers to properties that are really just used for business purposes rather than residential living. And these can include office buildings, from small professional spaces to high rise type buildings you'll see in downtown. You have retail centers, so we have shopping malls, strip centers, and standalone stores, and grocery anchored are a preferred asset class right now. Industrial properties, so warehouses, logistics hubs, flex spaces, multifamily apartments, so any property with five or more units, separate doors, and land, raw, improved, or pad ready sites for development into something new. So, why would you want to invest in commercial real estate? Well, the big reason is cash flow potential. CRE leases are typically longer than residential, creating more predictable income over a longer period. You'll get appreciation in equity growth. So properties often gain value over time, especially in growth markets like Houston, Katy, and Fulshire. Here's another big one: tax benefits. Depreciation, interest deductions, and 1031 exchanges allow investors to optimize returns. Don't forget about cost segregation either. Diversification, balancing a portfolio with CRE reduces reliance on stock market volatility and gives you more stable returns. Some key metrics that beginners must understand. So cap rate is the one you'll hear the most. It measures return relative to the property price. You have NOI, or net operating income. So you have your gross rental income less your expenses, net operating income. Cash on cash return. It's this percentage of annual cash flow compared to the invested equity. So whatever you put into the deal. And DSCR, debt service coverage ratio, how well the income covers the loan payments. Generally, 1.25 is a good benchmark. So here are some financing options for beginners. We got SBA 504 and 7A loans, great for owner-occupied businesses. DSCR loans, ideal for investors focused on rental cash flow. There's bridge loans, short-term financing or acquisitions, or even repositioning of a property. And there's always traditional bank loans, stable rates for strong borrowers. And here's some risks to watch out for. So market shifts impacting rent demand, and we're coming through the end of the last shift. Rising interest rates affecting financing costs. We're coming through the end of that last shift. And vacancy and tenant turnover is always a predictable item in that category. And there's always, not always, but more often than not, unexpected maintenance or capital expenditures that you got to put in, and you got to recoup that money. So here's some tips from CRE beginners. Start small: retail, office, condo, small office, duplex to multifamily transition. Work with a commercial real estate broker and financing advisor like myself, and always underwrite conservatively. Plan for vacancies and unexpected costs. I would focus on location. Demographics and traffic patterns are key drivers of value. So here's our final takeaway for the day. Commercial real estate is one of the most powerful wealth building tools available today. And by understanding the basics, property types, financing options, and investment metrics, beginners can confidently step into the CRE world and set themselves up for long term success. And that's it for the day. Have a good one.